Hello everyone.
This meeting is being transcribed.
Results conference call for the first half of 2025. Martin Novák, Chief Financial Officer, will walk you through the presentation, and then we will open the floor to the questions. We also have Luděk Horn, Head of Trading, just in case you have some questions on the power market here. Now I'm handing over to Martin.
Thank you. Good afternoon. Good morning, everybody. So let's start with the presentation. On the first slide, or slide number 3, we can see actually overall financial results, where our EBITDA has reached almost 74 billion Czech crowns, which is an increase of 4.7 billion or 7%. Adjusted net income of 16.7 billion and net income 16.5 billion, which is down 21, respectively 22% year on year. Our capex has grown by about 11% to 22.8 billion Czech crowns. Important slide number 4 actually shows the difference between first half of 2024 and first half of 2025. There are a few factors, actually few negative factors, few positive factors. First negative factor is actually a decline in power prices, which has an effect of 6.4 billion year-on-year decline, as prices tend to go down even in the future. So this is about 6.4 billion. Technically speaking, it's actually 7.3 billion. And then there is some effect of different scheduling of nuclear plant outages, which is a positive effect. But overall, this segment is impacted by power prices, which is 6.4 billion negative. Trading down 2.1 billion. Again, it's not a loss, it's actually a lower profit, as volatility on the market is lower and lower month by month, basically. Trading achieved a very reasonable result of 1.9 billion Czech crowns. However, in first 6 months of last year, it was 3.9 billion. Then distribution segment is up by 3 billion, mainly due to higher allowed revenues thanks to increased investments in distribution assets of 1.6 billion, higher distributed electricity volume, 500 million Czech crowns, and mainly higher other allowed revenues and correction factors, which is 0.8 billion. Important, by far the largest actually positive impact of this first half is actually consolidation of GasNet, which is a gas distribution that we acquired actually as of September 1, 2024. So it does not show in 2024 numbers at all. So entire EBITDA is actually variant, and it is 6.4 billion Czech crowns for first 6 months of 2025. Sales segment shows also improvement, both on sales, retail and large customer sales, where the commodity purchase prices were lower compared to the previous times or previous period. And we also had 1.3 billion effect of undelivered commodities due to warmer weather in first half. So actually in first half 2024, we had a commodity that we did not deliver to customers. We had to return it or sell it back, whatever. It did not happen this year. So this is EBITDA variance. Looking actually at net income, there is actually a decline, as I said, of 22% or 21% respectively. By far the highest and basically the only main charge is actually depreciation. As GasNet is impacting our EBITDA, it's also impacting our line items below EBITDA, including depreciation. So part of it actually is related to GasNet, about 5.1 billion out of 10.5 variance, and remaining part is basically attributable to accelerated depreciation on coal assets, that we adopted as of October 1, 2024. So again, the accelerated depreciation was not in the results of first half of 2024. We adopted the accelerated depreciation because of the fact that coal plants seem to be discontinued around 2030. So we switched from a straight line method of depreciation to accelerated method when we are basically simply set copying the amount of hours it will actually produce power. So in 2025, 26, it will be definitely more than, for example, in 2029 or 2030. That's probably those are the main effects actually on our net income. On next slide, you have some operating results, volumetric data, which you can go through. We can actually skip that and go to slide number 7, where you can see our financial outlook. We actually increased our EBITDA target by 5 billion Czech crowns. We keep actually the range of 5 billion, but it is all increased by 5 billion. So now our EBITDA estimate is actually 132 to 137 billion Czech crowns. Adjusted net income was we actually increased the bottom of the range to 26 billion Czech crowns. So now the new range is 26 to 30 billion Czech crowns. The main causes of our EBITDA target change are actually listed on the right of the side of the chart. So it is, I would say, almost equal. It has almost equal effect. It's higher power prices than we expected in our last guidance. So especially the power prices of the power, or the power prices of the power that we had unsold actually, or did not sell for 2025, and still have some available for peaks and optimization and so on. We are also saving on fixed operating expenses. We have higher settlement of electricity not invoiced to end customers, higher revenues from distribution and connection fees, and lower purchase costs for commodities in sales segment. You can see also assumptions on which our estimate is based. So you can see power generation 44 to 43 terawatt hours, power prices in Czech Republic 121 to 125 euros per megawatt hour, emission allowances 79 to 83, depreciation that we already mentioned 55 billion, out of which 9 billion is gas net, and windfall tax of 29 to 73 billion Czech crowns. On the next slide, you can actually see significant events in nuclear energy development. As we, I think, already discussed in May, we managed to sell 80% share in the new nuclear project to the government. As of April 30th, the transaction was settled actually on May the 5th. The purchase price was 3.6 billion, which is 80% of original investment of 4.5 billion. We are not consolidating anything from other than equity method consolidation, so we don't do full consolidation of this investment, as we are basically financial investor with a provided stake, but we have no obligation to furnish any cash or anything in the future. There was also an agreement concluded between the new nuclear project, the company Dukovany 2, and Korean KHNP company, to build actually 2 units, each of them 1,063 megawatts. Another milestone, actually, Great British Energy Nuclear selected Rolls-Royce SMR as a supplier of small modular reactors. We completed its investment in UK-based SMR developer and acquired stake of approximately 20%. So this was actually important milestone. Now actually the company where we hold 20% stake will start working on the project to deliver 3 units to British government, and at the same time we are doing preparatory work for first SMR, Rolls-Royce SMR actually in the Czech Republic internally, the new plant location. So that's the new nuclear development. Current nuclear facilities, there are some highlights as well. that relate to actually current facilities. I think the most important one is increase of Dukovany installed capacity by 14 megawatts per unit. So it is 4 times 14 megawatts that we have now more. In total, Dukovany power plant has 4 times 524 megawatts of installed capacity. On the slide number 10, actually, you can see some information on transformation of the heating industry or heat supply, the heat delivery business. We have basically all our power plants are also serving to the heat plants or heat locations. As you can see, actually, individual power plants and the way we treat it. I think the most important is actually Mělník, which is about 30 kilometers out of Prague, supplying city of Prague with heat. Today it is actually through using coal-fired plant. We started construction of largest actually heat plant that will be gas-fired or gas-powered, 266 megawatts of electricity and 183 heat megawatts actually will be installed near Prague. The construction has already started. We also started construction of waste-to-energy facility that should process 320,000 tons of waste per year. Generation mining segment in more details actually on slide 12. You can see that the segment actually in total has earned 46.5 billion Czech crowns, which is by 15% less. Actually, the largest negative variance is coming from emission generating facilities, where we are actually 51% down compared to first half of 2024. Again, the details are described on the chart on the slide. It's on the right side. Clearly, we can see an effect of decreasing power prices, increasing carbon credits in our emission generation facilities. And on next slide, actually, you can see charts of our nuclear and renewable generation. It is increase in nuclear generation year-on-year of 6%. We would like to keep that actually for full year, where we are targeting almost 32 terawatt-hours to be produced, mainly due to extension of fuel cycles and modifications of outage plan. So we will have more kind of running hours in 2025 versus 2024. We have increased capacity in Dukovany, as I already described, and shorter scheduled outages of the Temelín nuclear plant. Renewables were down 17%, mainly due to natural conditions in 2024, when we had enough snow and water, which was not the case actually in 2025. And therefore we expect that our power generation from renewables will be 7% lower on a year-on-year basis for full year. Our clean energy generation would then be 5% higher, 35.2 terawatt hours. Fossil fuels, meaning coal and natural gas generation, was 12% up on first 6 months compared to last year. We expect it to be 4% down, mainly due to decline in our Polish assets, obviously, that we don't have anymore. We only had them first 5 weeks of 2025, which we disposed them, so we will be missing 0.9 terawatt hours from those assets. And our power generation from coal should remain flat, although it was 13% up due to colder winter in 2025 compared to 2024. Hedging, very important slide of market risks. This is actually on slide 15, where you can see our average achieved prices. Those are baseload prices that we are selling at our forward electricity. So 95 euros for 2026, going to 71 euros for 2029. We are 73% sold as of June 30th, actually, for 2026. The same chart on the right side relates to carbon credits. You you can see that the spread between power price and carbon credit is significantly narrower in 2028 and 2029 than it is today. So this will be a pressure on the economics of the coal plants for sure. Then the next segment, a few slides actually on distribution and sales. Distribution segment has a significant increase of actually in total of 90%. They made 9.4 billion, but clearly it is 6.4 billion coming from GasNet, the gas distribution, which we did not actually have in our numbers in 2024. And there is an increase in distribution, power distribution actually of 3 billion Czech crowns, mainly due to higher allowed revenues due to increased capex in the past of 1.6 billion, higher distributed volume of 500 million, and then higher other allowed revenues and correction factors of 4.8 billion. Comparing numbers for GasNet, should we have actually the company in our numbers, they would have made, or they did make actually in first half of 2024, 5.7 billion. So now actually they are 14% billion better than in the past year. Year-over-year development of gas and distribution and electricity distribution. On the left side, we have a chart of actually electricity distribution on our territory, which is 2% higher, but when you actually adjust it by climate and calendar, it is 1% higher. Gas distribution is actually 11% higher, but climate adjusted 2% higher. As I said, the winter of 2025 was colder than 24. Sales numbers or sales segment numbers actually are on page 19, where we have significant improvement in ČEZ Prodej, which is our retail customers company, and it delivered actually or earned 4.5 billion on EBITDA, which is 3.2 billion more than in first half of 2024. ESCO companies are about 35% higher, and they are both providing EBITDA from sales to commodities in Czech Republic, which is 77% increase, and then energy services both abroad and in the Czech Republic. ČEZ Prodej, or the retail organization, actually had a lower acquisition of commodity cost. Then they had actually effect of sales of undelivered commodities due to warmer weather in first half of 2024, which had a negative effect of 1.3 billion at the time. Now it's not there, so it's a positive variance. They had also higher volumes of delivered to end user customers, deliveries to end user customers, colder weather, 0.2 billion Czech crowns, and those are the main variances actually. Volume of electricity and gas sold and number of customers. I think for first half of the year, we are actually up by 8%, 17% in natural gas, 3% in electricity. Clearly, and obviously, it's also a function of the weather. Number of customers is stagnating, but we acquired a few hundred thousands of customers during collapse of a few retail organizations in 2021 and then later 22. So the move in electricity of 1% is relatively immaterial, and we have 4% more customers actually on natural gas. Revenues from sales of energy services, which is ESCO activities, we have 8% decline, which is mainly year-on-year temporary effects, timing effects of big contracts in 2024. But overall for the year,
you are allowed to unmute. To unmute yourself, press *6.
Then there is more information in the annexes, but now I think we can switch actually to Q&A session. Thank you.
Yes, so we are now open to your questions. Please use the Teams to raise your hand. I will call out your name and open the floor to your questions. Okay, so we have a first question from Annabeth.
Yes, hi. Thank you for taking my questions. Two from me. The first one is on the reports that E.ON would potentially be selling their gas grid in Czechia. I know you probably won't be able to comment on the specific transaction, but more generally, would you be interested in M&A and grids to increase your exposure there? I mean, you've already done the GasNet deal, and I guess would there be rationale to expand there? I mean, the returns look pretty attractive for the next regulatory period versus other European countries. And if you were to expand the gas distribution grid in the country, would there be synergies from that? If you were kind of almost the sole operator of gas distribution, anything you can comment kind of high level there would be great. The second question is a bit more high level on power prices long term. I think you hedged a very small amount of 2029 at just over 70 euros per megawatt hour. Is that kind of where you see power prices settling long term? And how do you think about the upside, downside to long term power prices, you know, given maybe downwards pressure from gas prices, but also a lot of discussion around whether there could be new demand in Europe from data centers, etc. So any views you have on the kind of long-term outlook for the power market would be great. Thank you.
Okay, so first question on gas grids. This is an ongoing transaction, and we don't provide any comments, any speculations, any ideas on how we view this in detail. So we cannot really comment on anything on E.ON sale of their distribution assets. Hedging prices, we have sold just a little for 2029. It's not taking a position. It's really doing a straightforward hedging, and 2029 is now available actually. So we are actually really selling our power that we are about to deliver, or we intend to deliver a straight line with no speculative, with no taking speculative point of view. For speculating point of view, we have actually prop trading. That is one of our segments that we record, but this is really straightforward linear hedging as it becomes available. We have actually Luděk Horn, who is head of our trading, so he may tell you any point of view from speculative point of view rather than from straightforward hedging point of view.
Okay. It's really hard to predict what prices will look like in future because, as you know, these prices are connected with the prices of natural gas and EUA, and both of these commodities are dependent. Prices of these commodities are dependent on other factors. So on long term, we expect that the prices will slightly go down. And we don't see any reason for prices going up. It would be a result of extraordinary events like the war somewhere in the world and so on.
Perfect. And can I just ask, and I appreciate you can't comment on the E.ON transaction, but I guess more generally, do you see balance sheet headroom for potential M&A? Whether that be kind of like more generally, I suppose.
Well, generally, of course, with our net debt to EBITDA of, I think, 1.3 now, there's definitely headroom, but we don't say that it would be necessarily aiming at this asset. So we can see headroom for, and we do actually M&A transactions in ESCO. However, they are quite smaller size. But related to gas, we really say nothing. So.
Got it. Thank you very much.
We can take the next question from Arthur Sidbon.
Yes. Thank you for taking my question. It's just one question on the EBITDA guidance increase. You identified a few drivers of the increase in the presentation, and obviously they are not so noticeable at the net income level because of the corporate tax surcharge in 2025. I was wondering if any of these drivers would still be noticeable in 2026 when potentially the drop through to net income would be more significant. Thank you very much.
This is really those drivers are actually drivers between our original estimate from May the 15th and now August the 7th. So those are things that actually have caused the guidance to move. It's really, I'm just looking at it. It might happen that there might be higher power prices that we think, or that we now actually see. Yes, it could be fixed operating expenses again. There could be, but it's really a matter of comparison. So that we really are comparing our original guidance. It's not that we are comparing with it last year or with anything else. So some of them might be. If you ask about our EBITDA level, just very simply, again, we don't provide any guidance on EBITDA. It's too early yet. We would normally do it in spring of next year. But with declining power prices, of course, there will be a pressure on our EBITDA. That's clear. On the other hand, windfall tax, and this is something that you touched on, should be attributable to 2025 only. So as of 2026, there should be no windfall tax effect, which would be probably by far the largest factor.
Thank you very much.
We can take the next question from Emmanuel Ogioni. Emma, can you unmute? You can unmute.
Sorry. Can you hear me now?
Yes, we can hear you.
Okay. Thank you for taking my questions. The first one is on GasNet. I think based on H1 results and your updated guidance, you can reach 13 billion of Czech crown this year. So you can confirm this. And the second question related to GasNet is the guidance for or at least the qualitative moving parts for 2026. And this is basically the first argument. The second question is on sales segment. Still, they provided a positive outlook, and we noticed that the higher profitability of 1.1, 1.4 billion per quarter in Q1 and Q2 was primarily related to the lower, not only the lower cost of commodities, but also the lower cost of deviation after the deregulation of the market. So I think this could be a more structural profitability for at least for 2025, so for the remaining part of the year. And my question is in particular focused on still on 26, if this higher profitability could be replicated also in 2026, or what are the moving parts? And then I have also a third question on the capacity market scheme. If you can update on this subject, it's currently under discussion. Thank you.
Okay, so GasNet actually, I think they are not really aiming at 13 billion. I think their target is something like 11 billion for 2025 rather than 13. So I would not really multiply their result by 2. So that's and partly, again, they are distribution companies, so most of the revenues they get during the winter, which is first quarter of the year. So In sales segment, yes, lower cost of deviations after the market got liberalized. The deviation cost was higher than it is today after it is stabilized. We could think that it could last, for longer than just 2025. That's perfectly true. Capacity payments, actually, there was a law approved allowing for capacity payments for CCGT plants. This is basically the key condition for us to be able to build gas plants making electricity and not heat and power as it is today. However, it needs to be actually designed, the scheme needs to be designed by the Ministry of Industry and notified with EU, and it's not done yet, They are working on it and have no really detailed schedule available now.
When you expect more clarity on this?
I have no information on that,
Okay. If I may also follow up on GasNet. Indeed, in your slides, you increased by 1 billion the contribution, and only for GasNet, and the overall contribution, the overall increase improvement in compared with the previous guidance for the distribution business unit, I think is not only will not be driven only by the electricity improvement, if I may. Probably 1 billion more compared with the old guidance, or 11 billion could be achieved based on your slides, or 8 billion increase compared with 7 billion of the previous quarter guidance for GasNet, if I'm correct.
Barbara, you have...
Yeah, you are right. We previously guided for GasNet to add 7 billion. Now we are giving the range 7 to 8. Clearly there is some upside risk, but not the main driver for increasing guidance in the distribution segment is coming from the electricity part.
Thank you. Thanks so much.
Yeah. Emma, did we answer everything? Yeah.
Yeah. Thank you. Thanks so much for your clarity.
Thank you. We can now take the question from Piotr Dzięciołowski from Citi.
Hi, good afternoon, everybody. Thank you for opportunity to ask questions. I have a couple of them. The first one I wanted to ask you about SMR. There was an article today that you may be building one in Czech Republic. Can you tell us, if you know already, what could be the amount of the capex and when could this capex take place? That's maybe the first question. I have a couple of ones, but I think one by one would be easier, maybe.
Regarding SMRs, yes, you're right. Our first project, which would be second after the British project, would be actually in Temelín. We don't communicate any numbers on capex, because the scheme would probably be very similar to the one that is today, meaning the state financing as it is for the big unit. I think the size of the SMR developed by Rolls-Royce is actually 470 megawatts. This is where we are aiming at with installed capacity.
Okay, understand. I just wanted to also follow up about your comment about the net debt of being 1.3 and having room for further M&A action. I just wanted to ask whether you thinking about it as kind of on the going forward basis, and whether you should not add the different liabilities, and what type of power price you would use to feel comfortable at getting leverage? Because my numbers suggest you are quite leveraged, going above 3 times on the forward-looking basis. But I just wanted to cross-check what comes on your estimate as a kind of economic net debt EBITDA when the power price is normalized.
You're right. Our target actually is about 3.5 net debt to EBITDA. Used to be 3, but with actually adding GasNet, it provides more stability in our earnings because of the distribution asset. So now it's actually 3.5. I think Moody's actually has issued new opinion on our rating, so we keep the rating, and it went from negative to positive after we disposed nuclear projects from our books, new nuclear project of Dukovany 2. We are planning to reach that level sometimes by the end of the decade, because as you know, we have a relatively heavy CapEx program ahead of us of about 400 billion Czech crowns that needs to be invested during a short period of time. On a theoretical question, is there any headroom for M&A? Yes, there is, especially now. And 3.5 net debt to EBITDA is our target, and should we be getting over it, we would probably change our CapEx plans or postpone them or modify them in some way. The power prices that we are using are mainly those that you can see on forward. So that's the best indication of what we have today.
Okay. And I have one more question about the Bohunice project. Apparently, you have a 49% stake in the Slovak one. So is this the active project, and you going to sell it, or is there any financial involvement there? And if you sell it, how much money would you get back?
I think there are some discussions going on with Slovak government, and that's all we can say, actually.
Okay. Can I squeeze in the last one?
Yes.
Sorry to ask so much. So one last question was, we clearly haven't discussed the takeover speculation about ČEZ, but assuming such an event takes place, what do you see? Do you see any positive elements for the company itself, that the new ownership structure with 100% government, would that have the company operate anyhow from your perspective as a management?
Again, it's a theoretical question that we can hear now before elections, but I wouldn't really leave it after the elections. It would have both advantages and disadvantages. Advantage would be, as you can see it on other companies, that they are 100% state-owned. They have significant rating uplift, from being state-owned. Great example is EDF, that has uplift of many notches, compared to being independent company, for example. So that could be, for example, positive. But I think it's too early to discuss the positives and negatives now.
Okay. Thank you very much. Thank you for the answer.
Next question from Oleg Galbur.
Yes, good afternoon, and thank you for the presentation. I have two questions, both on your 2025 updated guidance. First, can you please elaborate on your full year EBITDA guidance for the sales segment, which, if I'm not wrong, implies a strong decline of the segment's EBITDA in the second half of the year. So I was wondering, what are the underlying assumptions behind this guidance? And secondly, can you tell us if you stick to your original CapEx guidance for this year, which, if I'm not wrong, was at 70 billion Czech crowns? Thank you.
Yes, so we do stick on our original CapEx guidance of about 70 billion Czech crowns. That's correct. Of course, it can be few percent more or less as the year develops, and some projects may be actually sliding into next year, but generally it's a correct number. Full year sales segment, I think they actually have an impact of one-off payment or settlement of the losses in distribution grid, which is distribution. And also there's about 1.5 billion Czech crowns, I think, charge they have to pay for compared to last year. So that's what it is.
Okay. So this is the 1.3 billion that we can see here on the slide, yeah? Proceeds from litigations or?
Yeah.
All right. Understood. Thank you.
Bram Buring?
Yes, do you hear me?
Yes.
I've left this one for the end, but nevertheless. So in one of the business dailies this morning, the vice chair of ANO, Babish's party, said that regulated part of power bills is out of control. He'd consider it ideal if they cut transmission and distribution costs by 50%, or by 50 billion. So within the context of Czech legislation as it stands like this, what would the impact, if any, on ČEZ and on ČEZ and the other distribution companies if the government was to decide to save 50 billion on these tariffs?
Don't forget that we are less than 2 months before elections, so that's important to realize. The regulatory framework was actually is defined by Energy Regulatory Office, which is independent body. So government really does not have much force how to change that. We don't have a system of ruling the country with president decrees or prime minister resolutions. So that's what it is. That's clear.
Maybe I would only add, just for your recollection, when government had a thought that the renewable surcharges in customer bills were getting out of the control, the measure they took to relieve the end user bills was to finance part of the subsidies from the budget and from the state budget, and this is something that is being used. So that's one example from the history when government had used some tools they had, but that had neutral impact on our operations and the distributors and the companies operating in the sector.
Because I noted that this idea of his, as well as the privatization of ČEZ, neither of those things are included in the party's electoral platform. Not mentioned at all.
Yep.
Thank you.
Jan Rasta has a question. Yeah. You can unmute yourself, Honza, and
now, can you hear me?
Yes, we can hear you.
Okay, thank you. Good afternoon. We see good operating results of GasNet in the second quarter. But what about final result? If you can more elaborate. In a non-controlling interest, you released loss almost 300 million Czech crowns. So is that loss related to GasNet? Understand it correctly?
Yeah. So what we do, we actually adjust our adjusted net income by non-controlling interest. So we fully consolidate on EBITDA level, and then on the net income basis, we actually have to take out whatever is attributable to the minority shareholders. This is what you're asking.
On this topic, I would only add that basically the GasNet assets has to be revalued as part of the acquisition and consolidation process, and that led to the increase of the depreciation on consolidated books. While for the regulatory purposes, just standalone depreciation, which is lower, is being used. So the company is basically remains highly free cash flow generative, but in our consolidated accounts, we are using higher depreciation and therefore low contribution to the consolidated net income.
Okay. Thank you. Understand. Thank you.
We have the next question from Peter Bartek.
Good afternoon. Congratulations to the great results, very nice ones. And follow up to the GasNet consolidation question. in terms of cash flows or dividend payments from GasNet to its owners. So it would be paid from the standalone profits. So there would be a cash flow, even though the consolidated number looks like at zero or in minus. Yeah.
Exactly. Yes.
Okay. So in terms of cash flow, there will be some 50% outflow to the second part of owners. Yeah.
Yeah, 45%, I guess. Yeah, we are 55 and they are 45, I think.
Maybe one more question to the distribution business. If I look correctly, so in this year, you now expect some 2 to 4 billion increase in the electricity distribution. Is that sustainable, or how much of that was due to the cold weather? Yeah, that would be it. Thank you.
Yeah, I think, when we look actually at distribution segment explanation in the distribution slide, I think it's, the 1.6 out of those three is attributable to higher revenues from more CapEx. Something is cold weather, of course, but probably like 500 million, which is high distributed volume of electricity. And then there are higher connection fees of, let's say, 0.8 billion, which is actually higher demand for power connection, both power deliveries, but also offtake, for example, from photovoltaics and renewables. So there's the structure of those 3 billion. So adding 3 billion every year is probably not a reasonable assumption.
Okay. Thank you.
Okay, it seems there are no further questions, so thank you everyone for taking part in this call. And Investor Relations Department, as always, is available for your follow-up questions and detailed discussions on your forecasts, etc. Thank you very much.
Thank you. Goodbye.
Bye-bye.